Wall Street Journal article. I do apologize for people that are
I
blocked
hate
by
when you
the
do. I'm
Wall Street
blocked,
Journal
so
paywall.
it's like you do it on purpose.
Well, here's the thing. Here's a great thing. If you are blocked by Wall Street Journal, when there's something interesting to cover, we're going to cover it for you. You can just listen to this segment,
There
and
you go. Look at
you
you.
don't have to, you have to pay. But
Although we could
obviously, we'll
listen
link
to
it
the
up. But
article.
obviously, it's not. If you're not paying, you're not going to
Yeah. Mm-hmm.
want to click that link. All right. Online real estate isn't worth the chance, is what Wall Street Journal saying. What the heck does that mean? Okay. Even as here we go. You can make a lot of money on physical real estate right now. We're not talking about metaverse today. We're talking about the real
We're
deal.
skipping it.
But recent results from major online real estate players show 2022 isn't the year to play Monopoly in the stock market. Bobby, we'll put up that chart of the S&P 500 index against Opendoor Technologies, Zillow Group, Compass, and Redfin. Since April of 2021, the S&P 500 is up about 8%, while these four stocks, Opendoor, Zillow, Compass, Redfin, are on average down 58%. Okay. So they're saying don't buy these four stocks in 2022, they being the Wall Street Journal, because they don't believe they're going to have the rebound over the next 12 months. So there's better money, better places to put your money right now. The reasons they don't believe these four stocks are going to have the rebound, Nicole, is because there's no inventory to sell. All four of these companies in different ways are reliant on selling homes. Zillow, out of iBuying, reliant on selling leads to agents who sell homes, or with their flex model where they get a referral fee at closing. Opendoor has to buy homes and then resell them on the market, true iBuyer model. Obviously, there's limited opportunities for all investors to buy homes.
Right.
Redfin has a little bit of a mix where they've got some like true brokerage, they've got the online technology. All four of these are, labeled online technologies. They just rip Compass in here too, by the way. This isn't me. This is the Wall Street Journal ripping Compass. Okay. So this is Wall Street Journal's words. They may have stolen it from one of my past podcasts.
Oh, they stole it from you?
They may have.
Mm-hmm.
I'm not saying that they did.
That's all people do is listen to you.
Obviously, Compass relies completely on, gaining their income from commissions, which, by the way, Nicole, think about this. Zillow, they get 35% referral fees on Flex.
Right.
There are no Compass agents doing a lot of deals that have a 65% split. Like they're all like these teams, Compass, they are a much higher split. The splits within the team might be lower, but they're splitting out to somebody at much higher. So they have a much lower margin than Zillow. But so Wall Street Journal says Redfin, hybrid broker that also dabbles in the iBuying, so a little bit of both there. Compass is an old school brokerage firm dressed up as a technology company. Wall Street Journal just undressed Compass with that statement right there. I've been saying that for a long time.
They did. We did like their signs though.
Remember they got hot signs. They got a hot brand too.
Fly thing. Yeah, it was
no
so
question
pretty.
about it. It's very.
I haven't seen those around though. I mean, we have a few Compasses coming around here. I haven't seen any of those nice lit up signs.
So I've been very out front about saying, and you can go back on past Real Words, whether you're listening on the pod or watching on YouTube. I've said, don't buy Opendoor. Do not buy Compass stock. I said that when they IPO'd, and I am going to be right for a long time on that one. Don't buy Redfin. Said that about all three of those. Zillow's a buy. I still believe that. On its way down, I was buying. At the bottom, I was buying. I'm actually back up on my Zillow stock right now because I bought so much when it bottomed out. And then with the Q4 earnings report, it popped back up. Long-term, Zillow's a buy. That number that we talked about last week, Nicole, 63% of home buyers are using their app. They've got this dominant brand and the attention in the marketplace. And right now, over the next 12 months, I still believe it's a buy. These other three, I don't. So I disagree with Wall Street Journal on one of the four stocks being a buy in 2022. I think it would be Zillow. There are reasons for, Nicole, though, why these are not good buys in the stock market. is really focused around the inventory issue that we face.
Right.
So Redfin said Friday that active listings for the week ending February 13th were down 49% from the same period 2020. So if all four of these
Crazy.
companies have less homes to sell, less leads to sell, or less referrals or commissions to collect, how are they going to make money this year? It's a great point. What do you think? Are these buys? Do you think that the inventory will come up for them? Do you think they'll make money in other ways? What's your thoughts on these
Look at
four
you. You
companies?
you think I really am analyzing Redfin? I love that.
Yeah.
I
Have you
love that
been
you throw it.
analyzing earning reports for Redfin, Nicole?
I don't analyze anyone's earning
Which
reports.
one of the four is going to be the winner here, in your opinion?
Well, we're investors in Zillow. Me and my family, we
Oh, you
invested,
got
so
in.
we got
Good.
in. Yep, Whitey pulled the trigger. He
All
got
right.
in. He hopped in. I think when it was dropping, I think once they was that during the iBuyer, I feel like every minute we were looking at the numbers and he was waiting to see how much lower it went before he pulled the trigger. So I mean, obviously, my family's future is dependent on Zillow at this
Your whole
point. So
family's future is dependent
the
on Zillow.
entire family future is dependent on
Well,
Zillow.
I would not put all my eggs in one basket. This is not a financial
No
advice
way.
show,
No, it
but
is not a financial advice show. Nope.
don't do what Nicole did and put the mortgage on Zillow stock. I'm not
That's
saying
not what we
that.
really did, but
You
anyway,
did?
yeah. So no, are you
Okay. All right.
kidding me? Like
Thank
we're
God.
like total newbies over here. I mean, we're still the people that are keeping our money under our mattresses. So
And they don't lock their doors, folks. So there you
we do
go.
not lock our
If you
doors.
need some
Nope.
cash.
That's about all that I got. I mean, that's the only thing of value in that
All
house.
right. All right. So here's the big takeaway for me in this article. Moving on from the
Yep.
inventory, we talked about it on past shows. 1.6 million homes were started in 2021, so there is more inventory coming. Ivy Selman thinks it's enough. She thinks we'll actually have an increase in inventory, which will create a glut of inventory in 2023. So you've got economists on both sides of this thing. Here's going back to our last segment with Gary Keller. Here's a stat that does seem very bubblicious to me, which anytime there's a bubble that bursts would create more inventory. Zillow reported last week that there are now 481 US cities in which the typical home value is at least $1 million. That is up from fewer than 300 at the beginning of 2019. Is that sustainable?
$1 million.
$1 million, 481 cities. Now, I don't know what the typical home value means. Is that the median? If it was the median, they should just said median home
They did
price. But
not say that though.
they said the typical. So this is Zillow getting a little cute with the definition there. But if that's, let's just take that on face value.
And they're
If the
saying at
typical
least though, they're not even saying it's at 1 million. They're saying it's at least 1
at
million.
least a million,
Yes.
481 cities, is that sustainable? Or is it due to just like our dollars worth far less than it used to be, which also is true? Are both true where it can be not sustainable and our dollar is worth less? Where are you at on that?
Ah, I mean, there's no way that that's sustainable.
Yeah, I agree.
How do you maintain that? I mean, that's insanity. I mean, and again, there's no way that that can especially with that big of a rise. But again, I mean, there's so many contributing factors over the last 3 years. I mean, this is not a normal typical market. I mean, we're still in the middle of a pandemic. There's
In the
still
middle, I would say we're at the very end, but
I don't know.
I know that's debatable and people can crush me in the comments for
It's
that.
super.
But
Well, we won't even necessarily, I guess, go there. I guess I'm being a little loose on my words. Maybe I shouldn't say in the middle, but we are in a pandemic. But no, I mean, there's no way that that's sustainable.
yeah, I mean, I don't think the pandemic has anything to do with it.
Well, it certainly has contributing factors. I mean,
It's
you're talking about
contributed over the last 2 years,
supply
but
chains and, things
yeah,
are still
I
like
agree with that.
yeah, I mean, there's still so many delays in everything where it's
But
inevitably it's again, it's supply and demand.
take the pandemic out, is that sustainable going forward? My answer
Of
would be
course
no.
not. Of course not.
So,
And I don't necessarily mean that is that well, I do. I mean, it's if there wasn't a pandemic and this was happening, obviously it's not sustainable. I just we're in such this interesting world right now that
Oh, it's
no,
interesting.
it's yeah.
Interesting
It's
is a good way to put it. All right.
yep.
Moving on from that, love to know from you that number in particular, 481 cities where the typical home
At
is
least.
now $1 million at least
At
in home
least.
value, where we were less than 300 at the beginning of 2019. Is that sustainable, or is that due to just us printing so much money and those are the new costs of these homes? All right. Hey guys, if you enjoyed this short clip from the real world, click here for another one.
Or if you like the full episode, click here.